All righty, folks. Unfortunately, I am hearing from more and more people that were impacted by the Southern California fires. They're unfortunately finding out that they were somewhere between a little bit and a lot of it underinsured. So we're going to kind of break that down. I'm also hearing from more and more real estate agents that the insurance, or perhaps the cost or lack of getting insurance, is killing real estate transactions. And now that's happening across the country. We have the CEO of Steadily here. I want to talk about this, kind of get into what is really going on. And of course, always give you that plan B. You have it there on the screen, orat.steadilypartner.com. Always go there, get your quotes, see what's what. But Darren, I've unfortunately heard from about a dozen people already that the process of getting, their home evaluated and getting ultimately what will be the check from the insurance carrier is starting to happen. And unfortunately, a lot of people are finding out they were severely underinsured. So let's talk about what that means and then maybe what their options are after that.
Underinsurance really simply is when you bought a policy and you thought that it would cost $250,000 to repair the property burns down, and then the estimator comes back and says it's actually going to cost $400,000 to repair this property because there's no contractors in the area that are available. And so we have to bring in people from out of state and it's going to cost more. And so then you're saying it's physically going to cost me $400,000 to rebuild this property, but I only bought $250,000 worth of coverage. Where is the extra $150,000 going to come from? And the answer is out of your pocket.
Exactly.
That's the unfortunate reality. And so then people are in a really difficult situation where they say, I do not have enough to rebuild because I'm underinsured. I don't have $150,000 lying around. So therefore, do I just have to sell the property as a vacant lot, pay off what's left on my mortgage, and then I'm homeless and I have maybe $60,000 in equity that's left over or something like that? This is the very real situation that is playing out in California. Just add a zero to all of those numbers.
Yeah, add a zero. This is, again, we did a video, I think it was a month ago or so, when I admitted that I evaluated my insurance or my portfolio and I was underinsured across a large percentage of them. Folks, please go take a look at your deck page and make sure you are right. Insurance is, generally speaking, I look at it as for a cataclysmic event, a catastrophe. And heaven forbid, if that catastrophe happens, folks, you want to be made whole. And what I'm hearing from more and more people, they're just simply not going to be made whole because the policy they had was not enough, and not enough by a lot. And it's heartbreaking because, again, what's going to happen is there are people that had homes in their family for decades that can't afford to rebuild in the Palisades or like area. So they're not going to have a choice, Darren. They're going to have to scrape the lot and sell the lot, pay off the mortgage, take the equity left over from the insurance, take the equity from the lot sale, and simply go somewhere else. Now, some of them will go Inland Empire, somewhere cheaper in California. But Darren, I'm hearing more and more people are like, I'm out. I'm leaving California. This is enough. It's kind of crazy.
Well, that's right, because it also begs the question of, if the property burned down one time, yes, the trees are gone. So that specific property is probably not going to burn down again for the next 20 years because all the shrubs and stuff are gone. But it begs the question of, is this the area where we want to be building more, especially if you were at a property where the fire line was contained, but it got smoke damage. And now you're saying, okay, there's still flammable material here. Do I still want to be in this area? And does it make sense? I want to rewind a second and talk about limits on insurance and when they're going to apply and when they don't. So if you look at a landlord insurance policy or a homeowner's policy, there are 4 classes of claims that account for just about all the big stuff. Number 1 is water damage. That's like a broken pipe. That's not a flood. It's like broken pipes, leaks, things like that. Yep. Number 2 is wind damage. That's going to be a tree branch blowing through your yard in a tornado, the wind getting ripped off, hail damage, etc. Mostly roofs. Neither one of those are typically limit claims in your policy. You're typically looking at $25,000, $50,000, etc. Big claims, but not limit claims.
Correct.
And then the third one is fire. Fire is very often a max limit claim.
Correct.
And then the last one is liability. If somebody gets injured on your property, that is very often a max limit claim, like $1 million, $500,000, whatever you're carrying. And so when folks talk about being underinsured, it's typically not going to matter for the water and the wind claims, but for the fire and the liability, happens all the time.
Yeah, I think you're absolutely right. Again, folks, I've heard from over a dozen people in the last 3 or 4 weeks that they've gone through the process, and unfortunately, the result was they were underinsured by significant numbers. So please take a look at your deck pages. Make sure you're covered. But Darren, the other thing I'm hearing, and I think this is going to continue, especially in California, if not Florida and some other markets, is real estate transactions are simply canceling while they are in escrow. More and more buyers are going into contract, doing their inspections, getting the mortgage approved, and then going to get insurance. And either A, they can't get it, or B, it is way more expensive than historically has been. So I think, especially in markets like California, which are essentially capped, we're going to see a lot more transactions simply not happen because people can't get insurance.
That is true. And what will end up happening is that the property values for those hard to insure properties will go down until eventually it makes sense to go ahead and buy those properties. Because if you're looking at a $400,000 property and it's going to cost you $8,000 a year to insure, this is like a Florida example.
Yeah.
Maybe you say, I can't make that math work as a landlord. Like the NOI just doesn't make sense.
Mm-hmm.
But if that price comes down to $350,000, $340,000, you can make that work. And so when a deal falls through, what happens? The seller relists it for $10,000 less. And then the price moves down until eventually everything clears. So this is going to be a theme of most of the conversations that we have, which is if you let prices move around in the market, they will always reach an equilibrium where deals happen and things move forward. But if you hold one side constant, things get really out of whack quick.
Yes. Yeah. And I think you're seeing California is just a unfortunate, wonderful example of this. In California, it's no secret. There has been cap on insurance premium increases for years, if not decades. And what that has really caused, at least even before these fires, is for more and more companies to say, I'm not playing, I'm out. Now we're having more and more catastrophic events. More and more people will likely leave because of these caps. Anytime you put a cap or a constraint on something, there is something else that's going to happen, right? If you do A, B happens. And I think California, real estate transaction is going to see a massive impact in cancellations, and values could fall because people are being forced to self-insure or pass, do something else.
Values will fall, and they will fall until the market re-clears, and then things will stabilize. But it's that I say that flippantly, but the time period for that adjustment to happen can be 3 to 5 years. And for the people that are on the paying end of that, it's incredibly painful. But when you think about the distortions that happen in the market, you don't have to look any further than the National Flood Insurance Program. So one of the questions we have to ask ourselves is, why is it that we have these maps that say this is a 1 in 500 year floodplain or 1 in 1,000 year floodplain, and yet these properties seem to flood all the time?
Yeah.
And the answer is
once
because,
a decade.
right. And the answer is because the National Flood Insurance Program is willing to provide flood insurance for properties at well below the market clearing price, number one. And number two, folks have learned that FEMA is going to step in, a state of emergency will be declared, and they will often receive compensation for rebuilding their property, even if they did not have insurance. Now, that's specifically for floods and earthquakes, are the two categories. And so as a result, if you just imagine this mindset, if it were 1852 and you were a settler and you were going to go out there and chop down some trees with an axe and you were going to build your homestead, would you build it next to a river, next to the Mississippi? You wouldn't. There's no way in the world you would, because that that building is just a matter of time until that homestead gets washed away, and there's going to be no one that's going to pay you an insurance claim.
Yep.
But if you alter the market and you say, actually, there's the secret free insurance policy that is going to step in to pay you as long as the damage is bad enough, well, now it makes a ton of sense to build in those floodplains because you know that there's going to be a backstop to step in. And so a lot of the rethinking that is happening right now, both in terms of wildfire and hail and hurricanes and flooding, is should we really be providing these implicit incentives to build in parts of the United States where the environment does not want you to have a house?
Yeah, I think there's a lot of things going on. If we go back to kind of the core of this channel, which is real estate investors, I think real estate investors need to understand that, obviously insurance is required. I obviously recommend umbrella insurance. But if you're in an environment where, again, to use your Florida example, you get a quote for $8,000 and the numbers just don't pencil, it's okay. Follow it, track it. Eventually the prices will clear and they will make sense. Again, I think what we're in for potentially, given the size of the disaster in Southern California, is another year of, rising insurance costs. But, it's obviously too early to tell. But that claim in Southern California will undoubtedly be the largest fire claim in history, I suspect.
Yes, from a fire perspective, it's easily going to be the largest. There's nothing close. One of the upsides for savvy investors, though, if they understand that insurance on a particular property or particular market is very expensive and that's throwing off the pro formas, that's actually an opportunity for some folks to step in and get really good deals on the purchase side. Yes. Where if your financial situation allows for it, you can actually make a profit because other people are not able to snag those deals, and then the market price on those properties is going to come down. So one of the unfortunate things about these changing market dynamics is that it shifts the winners and the losers into different people. So before everything was fine and it was stable, something bad happened, and now the world gets reset. And so folks who were previously winning are now losing, but that also creates an opportunity for other folks that are nimble.
Absolutely. One of the things that we talk about on this channel all the time is doing the work, writing disrespectful offers, looking at days on market. One of the things I would strongly suspect is in markets where days on market are growing, like Florida, a lot of those are growing because buyers can't make the numbers work. They can't make them pencil. So if you are a real estate investor and you see that, you can lead the curve. You can go find that motivated seller who's going to listen to you and say, yes, Mr. Seller, I know you have insurance for $2,500 because you are grandfathered in. I can't get that for anything less than $8,000. That's why I have to pay $320 and not $400. They're going to hear that enough times, and eventually they're going to say yes to you. Is that kind of right?
That's exactly right.
Folks, do the work, track your market, learn your numbers. If you are a real estate investor, you need to understand that Steadily Insurance is focused on you. You can go to orat.steadilypartner.com. You can get a quote. You can get a bid if you want to compare policies you have. About half my audience has gotten better rates and better coverage with Steadily. The other half have found out they got pretty good coverage and they're actually happy with. So again, go there, see what's what. Darren, closing thoughts and wrap us up.
Lead-Learned Insurance is all we do. It's a difficult market right now, and we'd love to help.
There you go. Difficult market, but they're stepping in. They're helping landlords. Thanks, buddy.